All right. Hello, everybody. I hope you're all doing well. It is Thursday night where I am, Friday for many of you, depending on where you are in the world. Bitcoin is currently down to 56,000, which is about a 17% drop from its all-time high that occurred about a week and a half ago. Um, Obviously, the price is quite polarizing, as you would expect when you see this kind of drop over a relatively short period of time in crypto. And I wanted to make a quick video to show you guys exactly what kinds of things to look for when you're seeing a lot of polarization in the market, a lot of people looking at this moment as a great dip buy opportunity, others finding it to be a bit more of a panic sell opportunity. Obviously, in their minds, it's not a panic. They think it's justified. So, what we're looking at right now is the homepage for Santiment. We have, of course, the screeners, we have recent chart layouts, convos, all sorts of things. And I'm going to scroll down just a little bit to show you our social trends page. And on this page, we see the top 10 hottest or most rising trends compared to their respective normal resting average of mentions. So in other words, something like skyrocket or buy or dip, these are things that are of course mentioned on a regular basis, but especially now because of the crazy price movement that's been happening in the negative direction. So these three being on the top 10 trends chart means that compared to their normal averages, their normal respective averages, they're all seeing much higher discussion rates on the crypto platforms that we follow. And we have Twitter, Reddit, Discord, Telegram, and pro traders chats that we have a proprietary algorithm set up on to help monitor how often these various words are popping up on these platforms to help assist people who are trying to see what is being most discussed at any given time. So with that said, what we can do is kind of click into one of these and you'll see something like buy pop up, and you're seeing a rising trend, of course. And we'll touch on this in a moment, but I'm going to first show you one of the pre templates that I've set up here, which is a comparison of the terms buy dip or buy dips, or alternatively, short here in red. So buy dip or buy dips in blue, short in red. They're both using the same axis, so these are their true mentions right against each other. No compensation, despite the fact that buy the dip is mentioned a little bit less. That's why you'll see overwhelmingly more people calling short over time, simply because there hasn't been a lot of time to call for dip buys in the last 6 months. It's been mostly a very good rise for the majority of this time period, especially after the big dip occurred. If you bought this dip on May 23rd or even better, in mid-July, you're in a pretty good spot right now, even with this 17% dip. So that being said, the question is how we can use this for alpha. And what I think is very useful is to look at which trend is seeing a more dominant presence at any given time. So for example, many people are calling to buy the dip, of course, as you'd expect on a very large dip that occurred in mid-May. And um, usually when you're seeing an overwhelming amount of dip buy calls compared to short calls, people who are betting against the market, that's a sign that the crowd is optimistic. They're not being too fearful of the price going down further. And as a result, you'll often see the crowd will the price up temporarily. There's many people who have been in crypto for a long time believe that they're used to these large dips, and usually they know that it's a good time that you can buy at a less risky time, right? So those mentions went off the rails really in mid-May, and even though there was that small uptick, we eventually saw further downside. A little bit of volatility here, but look, we got all the way down. I know it's a little hard to see with the colors blending together, but we kept on going down, and the dip buyers back here in mid-May weren't really rewarded unless they got out really quickly after the short-term bounce. Um, and you'll notice that's not the first time this has happened. You'll see, right here, I guess that's more dominant from shorts, so it's not really that much of an outlier there. but you can see this one, there was clearly, that September 7th dip that caught a lot of people off guard. There was clearly a big bias toward buying the dip. And once again, we saw a very short-term bounce, but eventually there was further downside, a little bit of hope here, followed by another big dip. Um, and once again, we saw people say, all right, this is the dip to buy. A little bit of a bounce followed by that dip right back to about where they started, a little bit lower. Another mention of buy the dip dominating shorts, and then a little bit of a rise and then further fall. And this time, not really much of a call for buying the dip. And when the crowd stopped being interested in buying the dip, boom, we just see this huge uproar in price. Um, this is quite common. So obviously, when the crowd is all collectively thinking the price is going to go up, there still has to be an equal amount of percentages being lost in the markets. So, whales and smarter traders who've been around or they're very active in the crypto markets, they can take advantage when they start sniffing out this crowd perception that the price is going to uniformly move one direction. So on the converse side, if we look at the big spikes in shorts, times when people think it's time to really get in against the price of Bitcoin, which historically isn't really a very good idea. But of course, there are stretches where people have successfully shorted, and all the power to them. There shouldn't only be people betting for the markets, just like there are people in the S&P or precious metals who are always bullish on the markets. There are bears out there, and we saw the biggest spike in interest in shorts happening in mid-June. And these people actually rode a pretty nice wave down. And if they were really putting their money where their mouth was and shorting here, they got a nice payday for sure. Obviously some volatility, but if they were staying strong through all of this and got out in mid-July, they would have had a very successful short. That being said, more often than not, when there is a big interest in shorts, they tend to be liquidated. We have historically seen a lot of spikes that look like this, where there's a big rise and then, price starts to flatten out and they say, well, this must be the time to short because it's going back down. They get a little bit of hope, right? Just like we saw in the opposite direction for buy the dippers. And then boom, a lot of liquidations occurred right there. Same thing here. This was a nice big cluster of interest in shorts going on and huge rally right after. So long story short, when you look at these kinds of trends, when it's overwhelming in one direction compared to the other, that's when you see the opposite result tend to occur. So overwhelmingly bullish, price tends to go down for the midterm. Overwhelmingly bearish, price tends to go up in the midterm. Another way to look at this is to look at just the overall mentions of buy or buying or bought, all represented by the blue here, or sell or selling or sold, all represented by the red here. This tends to be a bit more true to what traders expect. Now, it's a little biased because of the fact that I have shared access turned off, because if I turn it on, you'll see that it's almost always going to be more people mentioning it's time to buy than time to sell. And with that in mind, this kind of lets the prominence of the big sell points stand out more. And you can see that actually, when people are mentioning sell, selling, or sold, they've gotten a little better results. So it's not perfect. I would call this a better counter indicator than this a true indicator that goes toward the direction the crowd is expecting. But this is probably more on the side of these spikes actually coming to fruition if you have enough patience. So for example, like this big sell spike, amazingly, it happened right at the top. Of course, when we turn that on, right, it isn't nearly as big of a spike. So I'm magnifying the sells to make them stand out more. So take it all with a grain of salt. That being said, one of the biggest spikes of the past at least 3 months that I'm highlighting right now occurred right at the then all-time high when it got up to almost 67K at the time. Another one right here, another big sell, selling, or sold spike, and boom, right at the top, things started to slide down. This one, just a couple days, actually 1 day before the big dip started. And now we're still seeing an overwhelming amount of sell mentions, not compared to buys, because remember, axe is turned off, buys still overwhelming. And with that, this is actually the second largest buy spike that we've seen in the past 3 months, the last one occurring on the dip opportunity that occurred on September 7th, that actually wasn't really an opportunity until people became less interested in buying. So um, both of these charts can be interesting. You can set these up just like I have. You can type in, whatever you'd like, really, even if it's not a non-crypto term. In our platform here with your pro membership, we'll find up to the hour data on what the frequency of those mentions are of that word, whether it's Elon Musk, or you know, Buterin, or just any person that might be of interest to you in the crypto community. And with that, I'll show you a few final things here. One would be the social dominance chart. And obviously, Bitcoin's social dominance chart is of interest right now. With prices being very volatile, there's been spikes in extra interest in Bitcoin. But lately, if we look at the last 6 months, which this chart is representing, we're seeing a pretty sizable slide down in the percentage of mentions of Bitcoin compared to the other top 100 crypto market cap assets. And that's how this is calculated. It's any one asset that you're looking at, the percentage of mentions versus the other top 100. So with that said, when things are really high like this is generally a good sign for Bitcoin, because obviously as the number one coin, the number one asset that is connected to trading pairs for whatever other altcoins are out there that people are typically trading in and out of, there are a lot of mentions at any given time when the markets are healthy. You can see there was this big dip here in early June where we really started to see social dominance, even over 40% at a few moments. And this was the highest we were at over the last 6 months. It's a good sign, whether the price is going down or up, because of the fact that more attention to Bitcoin generally means more daily active addresses, more circulation, and interest in the asset that is essentially propelling all other prices either up or down depending on its own performance. So on the other end, when you started to see this disinterest in Bitcoin, like we started to see a few altcoins begin to rally on this dip, I remember in late June, Bitcoin's interest sort of started to slide back down. And meme coins were really taking off around here. Dogecoin was being talked about. All sorts of assets that were not Bitcoin were getting the spotlight. And as a result, we were really starting to decline there. Now, we did finally start to pick up, especially as things started to slide down to prices we really hadn't seen since the beginning of the year. And this essentially marked the bottom right as social dominance was starting to pick up. Then we got here, right? We started to see a spike similar to what we were seeing back in June, not quite as high, but clearly very good. More interest in Bitcoin after a big rally right here in late July. And this was kind of a sign that the price could really start to rise. And yes, social dominance was starting to slide because altcoins were again taking off during this long rally. But all things considered, these kinds of spikes, especially on a price rise, are good signs that the price can continue. Conversely, right, like we saw it start to slide here right before the September 6th, September 7th dip that occurred. And of course, it drew a bunch of interest when the dip did happen again. But long-term wise, after we saw this big spike that again fueled another rally up, long-term wise over the past 2 months or so, we're seeing a huge slide down in interest in Bitcoin, which is a bit of a concerning sign. You don't like to see Bitcoin down at a 6-month low in social dominance, because that can be an indication that people are a little bit too altcoin focused right now without keeping interest and circulating tokens for the number one asset that's really going to be key to the rest of the crypto markets thriving. So that's social dominance. Last but not least, weighted sentiment. So what we're looking at here is essentially a math problem where it's multiplying the social volume of Bitcoin, just the overall mentions, by the amount of, or I should say the ratio between positive and negative commentary on a given day. These are 1-day candles, and generally when you multiply these together, you get a result that really shows spikes in when things are super euphoric here on the positive side, or super skeptical or FUD, if you will, on the negative side here, like we saw from mid-June to mid-July, mid-August all the way to early October. These are typically the times where you see a lot of local bottoms, good times to buy, because the rest of the markets are very fearful. They're uniformly thinking that the price is going to keep going down, and that tends to be the time when the whales and the big key stakeholders really pounce and drive up the price to liquidate the shorts that are likely going on when sentiment is getting this low. So as of now, we've seen a couple recent big euphoric spikes. We saw this one, which was very short-lived. Then we saw this one that occurred right at the local top, which was a then all-time high on October 20th. And then we saw another local top here at 64.1. Interestingly, we didn't get a euphoria spike on this latest all-time high, going all the way above 68.5K on November 8th. But all things considered, once we started to see this big decline here a few days ago, we saw the biggest euphoric spike since October 20th, indicating that people are pretty fearless right now and don't believe the hype about this dip and don't think it can really fall too much further, at least according to the majority. That's why you're seeing such a high divergence above the norm. So this is about 4 standard deviations above the regular sentiment toward Bitcoin on an average day. So that's significant. Here we actually got all the way above 5.6 standard deviations, which is just massive. So the more extreme these spikes are, the more confident it is that the crowd is a bit too euphoric, and those are the times to really watch out. When you really want to find opportunities are when we go negative, like we briefly were here at the beginning of November. Look at how this was essentially the bottom. And right when it kind of bottomed out at about negative 0.5 below negative 0.5 below regular standard deviation, that's when prices really propelled upwards. So it's a really great counter indicator among the many other ones that we have. I recommend really checking in on some of the various charts I just showed. They're really effective if you're looking at them collectively, especially in extreme price conditions right now. I really hope this helped. Don't forget that we have the promo code SANGIVING21. It's exactly as it sounds, spelled SANGIVING21. Enter it on our app.santiment.net/pricing page, and you'll get 35% off your first month. Really great time to get into Sandbase Pro. I really hope you guys check it out. And tune in tomorrow for our This Week in Crypto. Myself and Dino are going to talk about these metrics we're looking at now, along with other assets that you guys request. So think about what you'd like an update on, and we'll try to get to as many as we possibly can. In the meantime, stay safe. Talk to you all soon, and let's hope the markets pick up. Cheers.